Because of this continuous struggle and continuous rejections from the trend line and from the heavy resistance levels, the trend is changing in the S&P 500, and its earliest confirmation came through the MACD of the S&P 500, which turned bearish on Friday on 17th of July. And again, for the same reason, the rejection from the trend lines and from the heavy resistance levels and the zones, there are very little or very limited chances that the S&P 500 will be in a condition to make a new all-time high in next 1 to 2 weeks. Now, if there is a potential trend change and there will not be any ATH in the month of July, then why I am still saying the bullish or the bullishness in the S&P 500 and in the entire US stock market? For that, the reason is the S&P 500 itself, but the primary reason is the Dow Jones. Because Dow Jones is now coming into the oversold condition. It will not happen on Monday or Tuesday. If there comes continuous pressure, if there comes continuous fall for 2 or 3 days, then the Dow Jones will hit the oversold condition and the bearish side saturation. That will then force the Dow Jones and the entire US stock market to move up. And if by that time the S&P 500 holds, then only it will be in a condition to sustain and to trade and to remain bullish. But that bullishness will face heavy pressure again at the same point. What is this point? What is so special about the trend lines or the levels and the resistance zones? The most important level in the bull side from where the S&P 500 got continuous rejections is the 756X level. And after the 756X level, there was the trend line in the 757X and then the level in the 758X. In this manner, these three, from 756X to the 758X, this was very heavy resistance zone created by these two strong resistance levels and the trend line. And again, the same pattern was repeated on Tuesday 14th of July. The high was 7557, and we knew that the most it can move will be into this zone, and then there will be rejection, then there will be the fall and the failure. And that was not the isolated incident, because Wednesday on 15th of July, again the same. If you notice, the high was 7581 and it failed and closed in the 757X range. This is why I mentioned here that now there are the dual rejections from the same zone. This means that there will be a fall, and the fall will be back to the 753X. And because the S&P 500 failed to clear this heavy resistance range, this heavy resistance zone on these 4 occasions, 1, 2, 3, 4, this is why on Thursday 16th of July, this was now very much clear that if the S&P 500 fails to clear this heavy resistance range, this heavy resistance zone in the first half before 12:30 p.m. Eastern time, in that case there will be the failure, the intraday rejection. And because the S&P 500 closed in a special condition on Thursday, this was clear that next day on Friday, irrespective of anything, there will be a fall and the movement will be in the 7,400 range. The S&P 500 will defend the 7,404X level. This level will provide a very strong cushion and will help the S&P 500 to move to the 747X and then to the 7,500 intraday. And this was in my pre-market analysis, means before the open of the stock market, we knew that there will be a good retrace, a heavy retrace, like 1% retrace intraday from the 7,404X. But now that the S&P 500 has failed to disallow the crossover, the bearish crossover in the MACD, and the MACD is now bearish, stochastic RSI is now bearish on the daily chart. This means that now there is a bearish momentum. And now there is a potential trend change in the S&P 500, and in the next week by Wednesday, if nothing helps, in that case the moving averages will give the bearish crossover and then the trend will change. But even if the trend changes to bearish, then also the S&P 500 will remain in a condition to get a bullish retrace. So what will be these conditions for the bullish and the bearish retrace or the fall, more fall to the 7,300 to the 7,200? What are the chances for the new all-time high level? What will be the support and resistance levels, the support and resistance zones, and what the technical indicators are suggesting for the next week? All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of July 20th, means from July 20th, which is Monday, to July 24th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part is the technical part. In the technical part, I will discuss the technical indicators and the technical movement and the trend on the weekly and the daily chart. The second part is the probable movement. In the probable movement section, I will tell you how the S&P 500 is going to trade and behave in the coming week, what will be the bullish bearish conditions, the levels, zones, etc, etc. And guys, it is recommended that you should watch both of these, the parts, the technical part and the probable movement part, in order to understand what is expected to happen in the US stock market in the coming week. So first I'm going to start with the technical part. So guys, now I'm going to discuss the first part, and in this, the first part of the agenda, the technical part, I have divided it into these two sections, weekly chart and the daily chart. Weekly chart means the long-term picture and the daily chart means the short-term picture. Okay, so once I cover both of these, the weekly and the daily chart, the technicals, then we will get a very clear idea whether there will be the bullish movement or the bearish movement in the next week, and if there will be any chances for the reversal for the recovery. So let's first discuss the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now before I discuss the candle, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the candle. This weekly candle of the S&P 500 is a very heavy bearish candle. The open of the candle was above the open of the previous candle, but the closing of this candle is below the open and the closing of the previous candle, indicating heavy bearishness, indicating an initial or intraday bearish movement on Monday, but not a gap down open. Okay, now let's analyze the weekly candle of the Dow Jones. So if you have watched the previous S&P 500 weekly technical analysis, then there I have shown you that this candle of the Dow Jones, this was a bearish spindle, and this was indicating a reversal, means the bearish side movement, and this is what we have seen, the bearish candle. Anyways, this is a bearish candle of the Dow Jones. Again, the closing of the candle is below the open and closing prices of the previous candle, okay, but is not in the absolute box form. This is why an initial or intraday bearish movement on Monday. So now it is confirmed that on Monday, technically there will be an initial or intraday bearish movement. There may or may not come a gap down open, but an initial or intraday bearish movement. Now let's analyze the technical indicators. So technically the S&P 500 is bullish through the moving averages, bullish through the Bollinger Bands, bullish through the Ichimoku cloud on the weekly chart, and the S&P 500 is still holding bullish through the MACD, but is clearly bearish through the stochastic RSI on the weekly chart. Okay, no saturation, no overbought, nothing. Now if you notice this, the MACD of on the weekly chart of the S&P 500, then it is now after mid of April, now it is coming into a condition wherein we can see a bearish crossover in the MACD of the S&P 500. Once this happens on the weekly chart, then the daily chart trend will change. Confirmed that the daily chart trend will change, then there will be no ifs or buts, that trend will change. Okay, however, this is not so easy, means getting this bearishness. Okay, it is not so easy. For this, either there must come a very heavy bearish candle, weekly candle, okay, for the entire week, the weekly candle, very heavy bearish candle, so that this can be forced, the change, or there must come two back-to-back two red candles, two bearish candles, then only this will happen. Okay, so for now, considering all of these factors and everything, the S&P 500 will be considered as 80% bullish on the weekly chart, means the long-term trend is still bullish on the weekly chart in the S&P 500. Now comes the Dow Jones. Dow Jones is also the same, bullish through the Bollinger Bands, moving averages, Ichimoku cloud on the weekly chart, and the Dow Jones is bullish through the MACD on the weekly chart. But see, unlike last week, until last week, the Dow Jones was in the overbought condition, and the stochastic RSI was also bullish, heavily bullish, but now that stochastic RSI has turned bearish. Okay, and Dow Jones is now coming out of the overbought condition. But yes, there is one point. See, but before that, the Dow Jones is now will be considered as 80% bullish. Last week the Dow Jones was 100% bullish on the weekly chart. This means that the long-term trend is still bullish. Now, the overbought condition. If there comes a green candle, okay, a normal green candle or a good green candle on the weekly chart. Remember, the weekly chart means Monday, Tuesday, Wednesday, Thursday, Friday. The open price on Monday and the closing price on Friday. Okay, that will be this the entire week. If there comes a normal or a good bullish candle, good green candle in the next week, in that case the Dow Jones will remain in the overbought condition and then will create a problem to the entire stock market in the coming weeks. Okay, so in this manner the Dow Jones is also 80% bullish, just like the S&P 500. So this is indicating that the trend in the long term is still bullish. Now one more thing, very important thing, this is something that I have discussed the last week also. This you can see here. Okay, even though there is pressure, bearishness, but still the S&P 500 is not coming down. The Dow Jones is not coming down. It is still holding bullish. There is just a limited fall. It is still holding bullish. It is not coming down. Okay, the S&P 500 is now it is kind of creating a consolidation, consolidated. This is the pattern. Okay, this consolidation means, or this consolidation indicates that if there comes just one good or one strong bullish reason, let's say the Middle East war is over, that will be the good or strong bullish reason. Okay, I'm not saying the ceasefire is announced, that is a different thing, but the war is completely over, the Middle East war is completely over, that will be a good or strong bullish reason. Number two, the earnings. Okay, in this week only Google or Alphabet will release the earnings, but in the last week of the July, all of the primes, Microsoft, Apple, okay, all of these, they will release the earnings. So in the last week of July, okay, if the earnings of all of the primes are exceptionally good and everything is good, okay, and also at the same time the ceasefire is announced, then combining these two factors, there will be a condition that can trigger heavy bullishness and can help the S&P 500 to break or to come out of this the consolidation pattern. Okay, the fall, it is already, the pressure is already there. Okay, the fall at most it can happen to this, the low of this candle. This is 7237.85, 7237.85. okay, fall can happen to this level, but the bullishness will means as long as this the previous all-time high is defended, means that there is no hit, there is no breach of this the previous all-time high, S&P 500 will not be able to move up significantly. Even if there comes the breach of this the previous all-time high, then also we will be needing continuous daily closings above the previous all-time high in the absence of the favorable earnings and in the absence of this the strong news. Okay, we will be needing this kind of condition. What does all of this indicates, or what does all of this signifies? All of this indicates or signifies that the bullish side, no matter what, the bullish side will remain limited and restricted. The bullish side can happen, bullishness can happen, not a problem, because already there is the long-term bullish trend. But that bullish side movement will remain limited and restricted. Now, how soon we can see this to happen, this the breakout to happen? Okay, what will the conditions? Okay, whether the trend will change in the short term or not. So for that, let's move on to the daily chart, because the daily chart will tell us, daily chart is the short term picture. It will tell us what is technically expected to happen in the next week. Okay, so let's move on to the daily chart. So guys, now we are here on the daily chart. Daily chart means one candle represents one candle indicates one day, not 1 week or 1 hour. Now, daily chart is the short term picture, means what is technically happening or is going to happen in the next week, the week of July 20th. But guys, before I discuss the candle, there is the hype button on YouTube. So far, if you have liked this video, then please hit like to appreciate, and please hit the hype button to show your appreciation. Now, let's first discuss the candle, the last candle of the S&P 500. It's a weak bullish candle. Okay, why I am saying a weak bullish candle? Because the open price, the closing is still above the open price, and intraday there was heavy recovery, 1% recovery in the S&P 500. This means the S&P 500 is still trying. It is still trying to move up, but it failed. Okay, both open and closings are below the previous candle. Now, this is not indicating a gap up open or an initial or intraday bullish movement. Okay, because the open and closing of the candle are below the 50% of the candle itself. Right? This is why on Monday there will be an initial or intraday bearish movement on Monday. Okay, but not a gap down, not a gap up. Okay, nothing like that. Just an initial or intraday bearish movement on Monday. Then what is the significance of this, the weak bullish? Okay, if the bearishness is expected to happen, well, that I will discuss once I complete the technicals. Now comes the last daily candle of the Dow Jones. Now if you notice, it's a good bearish candle. Okay, there are no bullish signs in this the candle. Clearly it tried to move up, came down, closing is below the 50% of the candle itself. Open and closing are below the previous candle. All of this indicates an initial or intraday bearish movement on Monday. That's it. Okay. So now all of the candles, the weekly chart candles and the daily chart candles of the Dow Jones and the S&P 500 are indicating an initial or intraday bearish movement on Monday. Okay. So now what does all of this indicates? All of this indicates that there will be weakness and bearish pressure on Monday and also on Tuesday, as the situation is not expected to improve significantly and sharply on Monday itself. Okay. Now, the technical indicators will tell us whether there are any chances for a good reversal, for a good movement, okay, on Monday itself, okay, or if this will happen after Wednesday. So now, technically, the S&P 500 is bearish through the Bollinger Bands, neutral through the moving averages, but is still bullish through the Ichimoku cloud on the daily chart, and the S&P 500 is, okay, this is the major change. This is what I have discussed in the beginning of the video. This is the change. MACD has turned bearish. So now the MACD is bearish. The S&P 500 is bearish through these both MACD and the stochastic RSI. Okay, and there is no saturation, no overbought or no oversold. Now, the S&P 500 in this condition will be considered as 60% bearish. 60% bearish. And the momentum, the most important part is the momentum. The momentum is bearish. Why? Because the MACD is bearish and the stochastic RSI is bearish. Both of these indicates the momentum. Okay. So the momentum is now bearish, and we are expecting that now if there comes no help, okay, if it fails to clear the heavy resistance level, in that case it will have to come down. There is no other option. It will have to enter into the S&P 500 will enter into the 7,300 range. Now comes the Dow Jones. The Dow Jones is bearish through the Bollinger Bands on the daily chart, neutral through the moving averages, bullish through the Ichimoku cloud on the daily chart. It is similar to the S&P 500, and the MACD of the Dow Jones is bearish on the daily chart. Stochastic RSI is already bearish. It is out of the saturation and the overbought on these are conditions. Okay. In this manner, the Dow Jones is also 60% bearish on the daily chart. Okay. However, there will be a blessing in disguise to the entire US stock market through the Dow Jones. Now it is clear that on the weekly chart, both of these, the S&P 500 and the Dow Jones, are 80% bullish, means the long-term trend is bullish. But the short-term, the daily charts, the S&P 500 and Dow Jones are 60% bearish, means the short-term trend is bearish. Okay. And now there is the bearish momentum in both the S&P 500 and the Dow Jones, because the MACD and the stochastic RSI both are bearish. Okay, the blessing in disguise is in the Dow Jones. Why through the Dow Jones? If you notice, the stochastic RSI of the Dow Jones is now very near to the absolute zero. Okay, K equal to 0, because the long-term trend is still bullish. This is why. Once the K equal to 0 is seen, once the Dow Jones, the stochastic RSI of the Dow Jones hits the K equal to 0, the Dow Jones will come into the technical condition wherein it will allow to get a bullish retrace. If this happens on Monday, then on Monday itself, the entire stock market will get a bullish retrace. Okay, if this happens on Tuesday, but remember, If there comes a green candle, in that case this will not happen in next 2 to 3 days, because a red candle is needed. Only when there comes a red candle on Monday, then on Tuesday we can expect the Dow Jones to hit the the stochastic RSI of the Dow Jones to hit the K equal to 0. Then this condition will happen or will be seen on Tuesday. However, there is a very special condition. If the S&P 500 closes in a very special condition on Monday, okay, then it doesn't matter what the Dow Jones is means what the stochastic RSI of the Dow Jones is doing, okay, then that special condition of the S&P 500 will give a very strong bullish movement, a gap up open and a strong bullish movement, like more than 1 or 1.5%, 100 points of gain within one day. Okay, so that I will discuss in the next part, that is the probable movement section. Okay, what will be these the conditions, okay, all of these. So now let's move on to this, the next part, the probable movement section. But guys, before I move on to the next section, the probable movement section, I want to share this information with you, that I give these the daily precise updates of the S&P 500 every day from Monday through Friday, as well as opportunities in the premium stocks, up to 100 opportunities in the premium stocks and the ETFs of the US stock market, as well as the midweek update video technical analysis, which is given every Wednesday with precise levels, numbers, zones, everything. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 and in a manner to the entire stock market every day from Monday through Friday, as well as opportunities in the premium stocks and the midweek update video technical analysis. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second part of the agenda of this S&P 500 weekly technical analysis, and here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones and in a manner to the entire stock market in the week of July 20th, the coming week, okay, and until July 24th, that will be the Friday. So now, first thing first, the only important thing that is going to happen in the next week, there is no significant data. That is okay, means the next week will be blank through the data. The next week will be blank. But on Wednesday after market hours, Google or Alphabet will post the earnings. Now, because we have two tickers, GOOG and GOOGL, okay, these two tickers and the combined weight of these two tickers is very heavy in the S&P 500 and in the Nasdaq, okay, not in the Dow Jones. This means that Wednesday after market hours, when Alphabet posts the earnings, releases the earnings, okay, if the earnings are better than expected, then these two of Alphabet, GOOG and GOOGL, will give a very heavy bullish push to the S&P 500 and the Dow Jones. And if the indices are struggling, if there is a fall, okay, Monday, Tuesday, Wednesday in these tech indices, or if the indices are struggling to sustain, then the favorable earnings of Alphabet will give that the required push, like 1 or 1.5% within a day. That will be possible, okay. If the earnings are bad or are not favorable, in that case the fall will continue. Then there is nothing that can help the S&P 500 or the Nasdaq, okay. In this manner, the next week is kind of blank. Only Wednesday after market hours, okay, Alphabet will post the earnings and its impact will be felt on Thursday and Friday. That's it. Okay, that's it. So now the technicals will take over. Okay, the movement will be purely technical and plus manipulation. Okay, because whenever there is the blank week, then generally we see the manipulation if the movement is against, okay, the market, against the market movers. In terms of the movement, what we know is that on Monday, irrespective of anything, there will be an initial or intraday bearish movement. Clear? Okay. This is confirmed through the weekly chart and the daily chart, as I've discussed in the previous section, the technical part section. Okay. At the same time, the Dow Jones is expected to hit the saturation through K equal to 0. If there comes very heavy fall, then it can hit, the Dow Jones can hit the K equal to 0 on Monday itself. If not, then we will have to wait for Tuesday. Then by Tuesday earliest it can hit, otherwise by Wednesday. Okay. So as of now, Tuesday is the most probable day when it can hit, Monday only a very heavy fall will tell us if it has hit the K equal to 0 or not. Okay, but what we know is that once the K equal to 0 is seen, once what is the K equal to 0? See, we have this is the stochastic RSI. It is a technical indicator. There are two channels, K channel and the D channel in the stochastic RSI. Okay, so D is the moving average of the K, and K is the stochastic value. Okay, and the formula is a little complex. So what happens here is that when K is equal to 0, or if K and D both are 0, this means that now there is the saturation in the bearish side. Means now the index cannot fall, or the stock cannot fall any further. It will have to get a bullish retrace no matter what. Okay, doesn't matter whether there is war or no war, doesn't matter, it will have to get the bullish retrace. Similarly, when K is equal to 100 or K is equal to D equal to 100, then no matter what is happening, if everything is good, favorable comments or so, the index will fall, the stock will fall. Okay, because of this, the ceiling in the bullish side. So now this, the K equal to 0 is the only technical factor that can help the Dow Jones, and then the Dow Jones will help the entire stock market. Okay, means the S&P 500 and all of these. There is one more support to the S&P 500 and the market, and that support will come through the Nasdaq. Okay, Nasdaq index, because Nasdaq is also expected to enter into the oversold condition. Okay, this will not happen on Monday. This can happen on Tuesday, at earliest on Tuesday. Okay, but yes, only there are very little chances, and for that to happen, there must come very heavy fall on Monday, more than 1.5% fall on Monday. Then only there will be chances that Nasdaq can hit the oversold condition. Okay, otherwise not. But if there comes a red candle on Monday in the entire stock market, S&P 500, Nasdaq and Dow Jones, okay, then on Tuesday, the Dow Jones will be in a condition wherein we will see K equal to 0, most likely K equal to 0. Okay, and also the Dow Jones, not the Dow Jones, the Nasdaq will hit the oversold condition. And because there are two indices which has hit the saturation in the bearish side and the oversold condition in the bearish side, this means that now technical reversal is most likely to happen. This will happen as early as either Tuesday intraday itself, okay, or on Wednesday. This will happen, right? Now, through the numbers, okay, the most important number as of now for the S&P 500 is the 7,404x level. This is holding, this is helping the S&P 500. This has helped the S&P 500 on Wednesday also. Before that, it has helped. Okay, since 29th of June, okay, it is helping. This level is helping the S&P 500 to hold and to sustain and to try for the bullishness. This means that once this level is gone, once there comes continuous hourly closings below this level or a daily closing below this level, then by default it will come under pressure. The S&P 500 will come under pressure, and then there will be no other option but to enter into the 7,300 range. Then S&P 500 will enter into the 7,300 range. There will be some hesitation around the 7,400 psychological mark. That will be for 2, 3, 4 hours. That's it. Okay, not more than that. Okay, but once the 7,404x level is gone, then there is nothing that can save. Then the index will have to come down. Okay, will have to enter into the 7,300 range. Now, when the S&P 500 enters into the 7,300 range, now again, let me give you the reason. Okay, again, why the 7,400? Why I am emphasizing on the 7,404x? So if you are new to my YouTube channel, okay, then it is a valid question for you. But if you have subscribed to my YouTube channel for last many weeks or months, then repeatedly I mentioned and have shown you, okay, how the 7,404x has worked and worked beautifully as a resistance and as a support to the S&P 500. This is why in my pre-market analysis on Friday, I clearly mentioned this to my Patreon community members that say, once the S&P 500 comes down, then there is a very strong support. Then there is a very strong cushion at the 7,404x level. It will retrace back to the 747x, and there will be chances for the recovery of the 7,500, means 1% intraday recovery. And no matter what, the 7,404x will hold the fall. Any breach will be recovered sharply. And we have seen the magic of the 7404x, okay, almost 1% intraday recovery, right? So once the 7404x is gone, then comes the 7306x level. 7306x level is strong enough to hold the fall in the S&P 500. Okay, this S&P 500 will hold here. Now there will be some chances. See, when it comes down, when the S&P 500 comes down to the 7306x for the first time, okay, then it will hold. This is what we know. Okay, but if it is continuously testing, continuously hitting the 7306x level, okay, then there will be some chances that it can lose to the 7302x level, just like it did on this day on 26th of June. Okay, exactly. This the same thing was happening, but because the S&P 500 recovered and sustained and then recovered the 736x the next day, then it was clear that it is not going to fall anymore, that rather it is going to move up and will recover the 7500. And but here in this case, okay, I have shown you earlier also, the main reason was the bullish slip, the formation of the bullish slip. Okay, and whenever the bullish slip forms, then there comes very heavy bullish movement. Similarly, whenever the bearish slip forms, then there comes very heavy fall, right? In this manner, the 736x will hold the fall. But now, because the S&P 500 is already within, is trading and is closing within the 7400 range, and here we have the 7004, the closing is at 7457.69. This means that the S&P 500 is already very near to the 7306x level. Okay, this means that now there are chances for the 7200 range. Okay, see these two conditions, the technical conditions, K equal to D, okay, and then the oversold condition in the Nasdaq. This will take 2 days, Monday and Tuesday. This will take 2 days, okay, before we can see there is the reversal. Right now, once the S&P 500 has come down and is trading into the 7306x, okay, if the S&P 500 holds within the 7300 range, okay, on Monday and Tuesday, then by default there will be a bullish condition, the bullish retrace condition through the technicals because of the oversold and this the saturation. Then there will be the reversal. Reversal means then the S&P 500 will try to recover the 7404x level. Okay, it will try, because for the 7500 to happen, for the new all-time high to happen, this is the pre-requirement, the 7404x. No closing, no continuous closing must happen below the 7404x. All closings must happen above the 7404x, no matter what. Simple, no matter what. Okay, so this is how it is going to work here in this the bearish side, because now we are expecting this the reversal. If Monday, Tuesday, Wednesday, on all of these are 3 days, okay, index is failing, the S&P 500 is still trading within the 7300 range, it has failed to recover the 7404x, or is trading below the 7404x level, daily closings are below the 7404x level by Wednesday, in that case we will have to wait for the help from Alphabet, from Google. If Google posts better than expected earnings, then fine, then in that case then the S&P 500 will be able to recover the 7404x. If it fails, in that case, the S&P 500 will have to come down, will enter into the 7200, and by that time the S&P 500, the Nasdaq will be out of the oversold condition, the Dow Jones will be out of the K equal to 0 condition, there will be some positive values. Okay, this will then open the room in the 7200 range. Okay, for now the fall is expected up to the 7200 range, and there are very little or limited chances for the 7100, or you can say like less than 5% chances for the 7100, 5 or 10% chances. Okay, for this to happen, the S&P 500 will have to enter into the 7200 by or before Wednesday. Okay, and then so that whatever the reversal will happen, that reversal is restricted to the 7200 or at most to the 736x, so that within a day, within 2 days, the S&P 500 can fall into the 7100. That is why I am saying 7,300 is there, but 7,200 is the scenario, or is you can say like the best case scenario, okay, in this the bearish side. This is there. Now the bull side, okay. So repeatedly I have mentioned that the candle is weak bullish candle, and also there are some conditions for the bullishness. So what are the conditions for the bullishness, okay, and what the candle is signifying even when there is this the heavy bearish pressure. So now let's discuss the bullish side. But guys, before that, so far if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And also please hit the hype button on YouTube to support and to show your appreciation. Now the bullish side, again the same, the 7,404x level, because for the bullishness to happen, all hourly closings, all 4 hourly closings, all daily closings must happen, must be seen above the 7,404x level no matter what. Okay, this means that S&P 500 on Friday on 17th of July closed above 7,404x at the 7457.69. On Monday, the S&P 500 must try to sustain, must hold, must close, must give continuous hourly closings above the 7,404x level. Let's say initially the S&P 500 fails. Initially there comes the hourly closings below the 7,404x level, but in last 2 or 3 hours the S&P 500 recovers, and then again the daily closing is above the 7,404x level. This means that now there are 2 consecutive daily closings above the 7,404x level. Fine. But this does not mean that there will be heavy bullishness. No. This means that on Tuesday we will have to see again if all continuous hourly closings are seen above the 7,404x or not. We need continuous hourly closings above the 7,404x level. Okay, then only there will be the continuous 4 hourly closings and the daily closings above the 7,404x level, and that will be the strong indication for the bullishness and will indicate that the bearish side will remain limited to the 7,400 range, but the bullish side will be open, and now there are chances for the recovery of the 7,500 with some chances of the all-time high in the last week of July or in the first week of August. Now, once the 7,404x level is recovered on the hourly closing basis, 4 hourly closing basis and the daily closing basis, then this does not mean that immediately there will be a sharp and continuous unidirectional bullish movement. No. In that case, immediately it will struggle at the 747x. This is again a strong level, not as strong as the 7,404x is, but still it is strong enough to restrict the bullish side movement at least for 1 to 2 days. Okay, see, on this day, on 8th of July 2026, there was very heavy intraday bullish recovery. Okay, this was the manipulated move. There was very heavy intraday bullish recovery, and the closing was above the 747x level at 7482, above this one. Okay, in this manner the S&P 500 cleared the 7,404x and the 747x within a day, means intraday. That is why we have seen this the bullish movement. Otherwise, if this would not have been seen, if the closing would have been below the 747x, in that case on 9th of July we would have seen another struggle, means another day of struggle. Okay, this is why the 747x after the 7,404x level, okay, this is very important for the bullishness to happen. Because once the 7,407x level is recovered, okay, now the S&P 500 comes into a strong condition. Okay, when I say recovered, I mean continuous hourly closings, continuous 4 hourly closings, continuous daily closing above the 747x level. Now the S&P 500 comes into a strong condition to move into the 7,500 and into the 7,500 where? Into the 7,500 2x. Okay, at least to the 7,500 2x level. Here it can move from here to here, like you can say like 40-50 points. Okay, then there is no strong barrier, then there is no strong resistance. Okay, so in that case it will be eligible to move here, okay, to this one. And here, okay, one more thing we need to understand, and this is regarding the 7500 psychological mark. If you notice, since 9th of July we have seen the continuous daily closings above the 7500, 1 2 3 4 5 6. On 13th of July the S&P 500 came down and the low was 7506, but was still above the 7500, and the closing was 7515. Okay, means the S&P 500 did not lose the 7500 on these 6 occasions, 1 2 3 4 5 6. This means that once the S&P 500 enters into the 7500, in that case the S&P 500 will then defend the 7500, will try to not to lose the 7500, and will sustain within the 7500, and then the 7500 psychological mark will become the tiebreaker for the bulls and the bears. Because once the S&P 500 has proven itself that S&P 500 can sustain, and all hourly closings, 4 hourly closings, daily closings are above the 7500 psychological mark, this means that now the S&P 500, the next heavy resistance is the 754x level. Then comes the 756x level, and these are the same, not the 4x, but the 756x is the level which I have repeatedly described that there will be a rejection, or there was a rejection. Because of that there will be a failure, because 756x level is so heavy that it is not easy to clear the 756x level as is. Okay, then there must come continuous hourly closings above the 756x level, so that S&P 500 can move up and can think of the new all-time high level. But it's not just about the 756x level, because now just after the 756x level, okay, there comes a trend line, this trend line here. Okay, and just after the trend line there comes a 758x calculated level. So once again, 1 2 3, just like this, 1 2 and 3. Okay, this is, or this will create very heavy technical resistance for the S&P 500, that highly likely, most likely, highly likely the S&P 500 will fail, because it will have to fail there. And see, this is something that I mentioned, okay, in the when I started this, the probable movement, that we need some strong reason. Means that the war is over in the Middle East. Okay, that is a strong reason. Number 2, earnings of the primes in the last week of July. Okay, those earnings are better than expected, plus there is the ceasefire in the Middle East. These two factors, we need something very, very strong that can push the S&P 500 beyond this strong resistance zone, this strong resistance range. Otherwise technically it is not possible. Technically, for this to happen, S&P 500 will have to spend at least 1 or 2 weeks, okay, around, not down, okay, not down, not here, but around, just like here. The S&P 500 will have to come into the consolidation around this, the heavy resistance zone, so that there comes, once there comes some technical condition that can trigger a bullish breakout, then S&P 500 will be able to come out of this, or will be able to breach and to move above this strong range. And then within a day it will not just breach this strong range, but will also form a new all-time high level. This means that for now the bullish side is strongly limited and restricted to this range from the 7506x, then to trend line, then to the 758x. These are the levels, the zone. Okay, this is the bullish side, the restriction in the bull side. And this restriction I am talking about when everything goes well and the S&P 500 is holding and is giving continuous hourly and daily closings above the 7404x level. Okay, because if the S&P 500 fails to hold and sustain at the 7404x level, then there is no bullishness, nothing. By default, okay, it will come down and the S&P 500 will enter into the 7300 range. Okay, then the 7500 is or will be out of the picture for the rest of the week. It will remain within the 7300. Okay, at most it can move up, or the bullish retrace. This is a technical bullish retrace through the Dow Jones or through the Nasdaq, will be into the 7400, not into the 7500. Okay, it will be limited and restricted here. Now, once the S&P 500 and the stock market comes into the session on Monday, then in my pre-market analysis to my Patreon community members, okay, I will mention if there are any chances for the K equal to D, this the K equal to 0 to happen in the Dow Jones, okay, or the chances for the oversold condition in the Nasdaq, or if there is any other condition, or if there is any other special condition. Okay, because if there comes a special condition, let's say there comes a gap down open, heavy gap down open, fall, okay, but still it holds, the S&P 500 holds and forms a special pattern. Okay, that special pattern is like very unique and very rarely seen. Okay, but if that special pattern happens, in that case, no matter what, by or Tuesday there will be a heavy gap up open and 1 or 1.5% heavy bullishness. Okay, if that special pattern does not form, then on Tuesday there will be the fall, just the opposite movement. Okay, well, in the pre-market analysis on Monday, in this the update, okay, I will mention this thing, and then in the subsequent updates I will mention. Okay, so guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link to join my Patreon community. Then you will be very well aware of everything, the movement, okay, on the daily basis and these things. So guys, once again, if you like this video, then please hit like to appreciate, and your appreciation matters a lot. And so far, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.